But you got to ask yourself, why should I do real estate over other forms of investment? You got to have a clear answer before you do that, is what I'm thinking. The reason is very simple.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable, real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. All right. Welcome, everybody. Thank you for coming out. Really appreciate it. And we have some special guests here today. Thank you guys, first of all, for coming out. I really appreciate it. I know it was a long travel between the miles that you guys have put in today to get here. I'm just extremely grateful for that. So from the bottom of my heart, thank you. Thank you to everybody that's coming out today here to talk about real estate, right? We have a wide range of topics to talk about. I'm not going to hold the mic for long. My name is Brett Riggins. I'm with PWS, Physician Wealth Systems. I'm the host of Real Estate Mogul podcast, Real Estate Mogul MD, and that's where I met these wonderful people up here. So I'm going to give the mic over to them. I'm going to talk about, let's see, we got triple net lease, we've got real estate and partnership, we've got multifamily, and we've got storage conversion. So I'm excited to learn more about this and have these guys drop some very interesting information. So is there any questions anybody has before we get started? No questions. Where's the money at? What's the easiest thing, right? What's passive income? But I think, first of all, I want to welcome Tom and Noel, all the way from Illinois and Houston, right? Here they have a Facebook group called Dentists and Doctors, Dentists and Physicians Investing Club, right? Right, and it's about 12,000 members already. So I'm really excited to have them share your experience, kind of expanding your association, how you guys met. I think is a great way to take that step in investing.
Hey everybody, my name is Noel Liu. I'm a partner and buddy here, Tom Bibby Varghese. We have a Facebook group called Dentist Doctors Passive Real Estate Investing Club, and basically we met through an event like this. And for us, it's all about networking, meeting new people, and meeting and getting those associateships, and also trying to make that relationship with everybody. So our group features mainly like dentists and doctors. And these guys are really looking to invest passively because many of them, like us, we have our own businesses. We have our dental practices that we are running, or physicians working at a hospital. So passive investment for healthcare workers, it's like one of those number one top priorities. There are many other vehicles that we like to invest in, but most of our colleagues, they have no idea about real estate, and which is why we formed this group. And Tom and I, we are so passionate to spread this knowledge and making sure like these guys understand, besides stocks and besides mutual funds, there are other vehicles where they can invest in. So that's our specialty right here. And myself and Tom, we are invested in multiple deals in multifamily, in storage, and industrial. We are investors both as limited partners as well as general partners. So Tom, I'll pass it up to you.
Good evening, everybody. So excited to be here tonight in the city of Charlotte. Great city, great vibe. Reminds me of my Tennessee days when I used to live in Tennessee a long time ago. I'm from Houston right now. Used to be, after that I moved to Chicago, was there for 20, 25 years, 23 years, and then moved to Houston. And I love it. I love that I don't have to deal with the snow and all that, But anyhow, tonight is a special night. Very excited again to meet all of you. Like Noel was saying, we met at an event. By the way, my name is Tom Bibby Varghese. I'm a serial entrepreneur. I used to work for consulting firms, and I started my business. I sold it, then I started another one, and business is my passion. And I was told by my accountant, you got to invest in real estate. So I didn't know anything about real estate. All I knew was go buy another house, and I didn't even know how to do that. Besides owning my own house, I didn't know anything. But anyway, this accountant said, hey, I'll find you the property. I'll get you in. And he found me a 6-unit. And as cash started coming in every month, I realized, man, this is a pretty good deal. So then I said, man, I got to scale up. I didn't know how to scale up because the reason I knew I had to scale up is because the guy who sold me that, he went and bought a 32 unit. So I started thinking, man, why did he sell me this and go get a 32 unit, So then I heard about this real estate conference. I went there, and that's how I met Noel and realized how wonderful he is and how wonderful conferences are in general and networking events. And until then, I was not going to events. And I realized, man, I wasted about 15 years of my life not going to do these events because meeting people is meeting the right people. I realized the most important thing, everything you need in life is in the hands of another person. So I met him, and I met several other partners. We did many deals, and now we both started the dentist group. And because of his dental background, he was very humble about it. He's a dental entrepreneur who's got over a dozen locations and expanding. So, we started it. The group quickly took off to over 12,000 members. And we do live. We have no agenda behind it. We just share information freely. And that's how we met Brett. And what I'm saying is that all these things happened as a result of networking, as a result of meeting people. And we have done several deals and looking to do more deals. And very excited to be here. Thank you for the invite. Thank you for having us. And what else? That's about it.
And because of Brett, now we got to meet wonderful people such as yourself. We got Laura, Noel, Clint, all you guys, appreciate it.
I was going to say, are we passing the mic down? Because I'm happy to solve your problems for dentists and doctors looking for investment opportunities. Let me just explain myself. I'm Laura Nguyen. I'm with Sentinel Net Lease. I'm the Director of Investor Relations and Marketing. I have over 15 years of commercial real estate experience, not only in the private sector, but also from the public sector. So I have been around the world in commercial and can tell you, I'm really excited for the future of commercial real estate, especially for those waiting to dip their toe into it. I feel like now is the time. I've been through many cycles. Our team at Sentinel Net Lease has over 150 years of combined experience in this sector. So we're a little bit of a contrarian. And if any of you are currently in jobs where you work in an office, you might look at me and with this stark, bald face and say, why the hell are you investing in office? And I will tell you right now is the time. When the herd mentality is telling you to go away, you got to steer away from them and come to your own fruition of understanding the fundamentals of commercial real estate, which is exactly what we're doing. We are not trying to hit home runs. We're hitting singles and doubles. Commercial real estate is 1 + 1 = 2. It's not 1 + 1 = 3 or 4. And if anybody tells you that they're doing that, then you need to start questioning where you're investing. And so I will tell you that Sentinel Net Lease has taken an approach to office, industrial, and retail in a big way. We recently launched a $100 million fund. We've raised about $40 million of capital that's committed to date, and we are looking for accredited investors to come along the way. Our returns are based upon stabilized income flowing cash properties where we can deliver 8 to 11% return year one cash on cash. Our exit strategy is a 16 to 20% net IRR. Again, we're not trying to hit a home run. We just want to hit a single and a double every once in a while. We might get a triple, but our math is very focused on you invest, you know what you're investing in. We're paying 8% on your current year cash on cash return, and we are not trying to hit it out of the park. Our firm has been around for 5 years now. We've done over $325 million of acquisitions in value, and we've syndicated over 19 deals. We recently went to the fund model because we found that our investors were not able to get into every deal they wanted to get into. Our equity checks are fairly small. We're not like I said, we're not trying to raise $20 to $25 million per asset, where our equity checks are somewhere between the $7 to $10 million range. And we were filling our equity buckets fairly quickly within 24 to 36 hours. So we raised the fund model to try to open this up to Main Street investors to buy Wall Street caliber properties. And so far, we've been able to deliver returns. I have some material over there if anybody would like to take a look at that. We're happy to share, and we welcome investors currently, especially you dentists and doctors. We're specifically looking at your 12,000 members over here, my friends. So anyways, appreciate Brett. Thank you for having us. I know our Chief Investment Officer, Dennis Cisterna, was recently on your podcast. So if anybody's looking for additional information, please go back and check out Brett's podcast with Dennis. And I will turn it over to you, my friend.
Awesome. Thank you so much. And I wanted to introduce you, too. I was like, I've practiced so long. This is an amazing opportunity to speak with Laura. So thank you for your time again. And next up here, we have Nomad Capital. And I met Clint. He is a North Carolina boy. He's all the way over from Wilmington here today. And he's going to tell you what he does. But what stood out to me was the model that they run. It is syndication style. I know they're doing a fund now, but just the way that they set it up and the way that they work with their investors is really important. So with no longer ado here, Nomad Capital, Mr. Clint Harris, thank you.
Thank you. It was easy for me to say yes to this event. I got to know Brett. I was on his podcast, had him on our podcast as well. It was easy for me to say yes to this event because I come from a healthcare background. I'm not a physician, but I did spend 16 years implanting pacemakers and defibrillators. I worked with cardiologists 11 years in Columbia, South Carolina. I took a promotion in 2017, moved to Wilmington, North Carolina, and built a territory there. 16 years with the same company, implanting pacemakers and defibrillators, working mostly with cardiologists, electrophysiologists, and ER doctors and surgeons. So I know the lifestyle. I spent all that time on call with my phone attached to my hip. I know what that lifestyle is like. As a sales rep for medical sales, it's kind of a young man's game, and it will grind you down. And I knew I wanted to have an option out of that life. So I chose real estate investing as my option to do that. So single family homes at first, which is a very slow way to get ahead. Then Airbnb properties. I still have 14 Airbnbs in Carolina Beach. We built a property management company that has 80 listings currently, and that's a really tiring way to get ahead. And even though I reached a level of financial independence, what I did not get is time and location independence. So I started the aggressive pursuit of more passive strategies because what I realized what I didn't want was just financial freedom. I wanted time and location independence as well because I want that independence of purpose that comes with it. So in 2020, I met my partners through the power of networking in the local real estate groups. We bought an old Kmart building. I was done with tenants. I wanted the most passive strategy I could find. Self-storage was the path that I chose because you're renting someone a box of air. There's no kitchens, there's no bathrooms. Hopefully, there's no one living in the units, right? So we bought an old Kmart building. There is very little appetite for big box retail. That space is basically dead. But even though Amazon and Walmart have destroyed that space and all the Kmarts are gone, it used to be a good place for that community to drive to that location to buy their home goods. And even though that's not the case anymore, it still is a great location for that same community to drive back to the same building and pay us to put the same stuff right back inside of it. There's an inverse flow of that microeconomy. So my partners are GCs with 30 years of commercial construction experience, started building storage in 2006, started doing some small conversions in 2016, 17, 19. In 2020, end of 2020, beginning of 2021, we bought a Kmart, converted it to storage. It did extremely well. We started doing syndication. So we did another deal, and then another deal, and then another deal. And in 2022, I left my job, took off my scrubs for the last time, started doing full-time commercial real estate. Over the last 3.5 years, we've done 2 Kmarts, 3 warehouses, 2 textile mills, a grocery store, and the Sundrop bottling facility in Gastonia, 15 miles from here. We can buy the building, do the construction in-house, and across that portfolio I just mentioned, on the day that we stabilize the property, our average is $65 a square foot for the building, the construction, the land, the permitting, all of it. Traditional ground up is going to cost you $120 a square foot for the construction. plus the cost of the land. So our end result is that at stabilization, we're landing at 35 to 38% loan to value, which means we can do a cash out refinance on the property to 55 or 60% loan to value, always fixed rate debt. We have never used variable rate, never will. That allows us to give our great returns to our investors. When we pay people out by way of a refinance, it's non-taxable because it's not a capital gain. Beyond that, everybody keeps their same percentage of equity. We stay in. It's a long-term hold. The reason we're called nomad capital is because a nomad goes where they want, when they want, and does what they want, because you have a portfolio of commercial real estate backing that up, giving you that freedom of purpose. So that's our model. Currently, we're sitting at $150 million in assets under management since starting syndication in 2021. We've never sold anything. That doesn't mean we won't and trim the portfolio, but we believe in a long-term vision. We got a 5-year goal to get to $500 million and a 10-year goal to $1 billion. That's the plan. There's plenty of big box retail buildings with very little appetite in it. We have the vertical integration to have an acquisition team finding mostly off-market deals. We build at cost plus 12%. We do property management and asset management at 5%. That vertical integration allows us to land at that very low LTV where we can recapitalize by way of refinance, pay the investors out non-taxable, and leave everyone in the deal so that we continue to hold it long-term and break the cycle of trading time for money.
Thank you, Clint. That's awesome. And so much of that, I have the privilege of having these guys on the show, and I get to ask honest questions with them, like, what did you say? But there's so much to that. It's so important. So when you have the opportunity to invest, the three things that I always talk about too is capital, commitment, and control. And when you can layer or balance, juggle those things and find those comfortable spots for yourself, these are the kind of opportunities that really give you that freedom as a passive investor. And it's really important. There's no such thing as passive income. This isn't just not, you don't push a button and then you make money, right? You could take that risk, right, guys? But I'm sure everybody here at this table has had risk go bad when you make that kind of choice. It's important to know who you're working with and understand the questions that you need to ask. Surrounding yourself with the right people will give you the opportunity to ask the right questions. I love the layout with Nomad Capital. I love what they're doing, how they're holding the deals, the converting, the price difference from a new build to the conversion. That was like a jaw dropper for me. And I don't have any storage yet, right? But I keep kicking them. I'm like, all right, give me some opportunity. So they do have opportunity. We're not here selling anything, but I know when you hear real estate, you're in the right room because your ears probably perk up, probably like me. I think my mind has got my name confused with real estate sometimes because I hear real estate. I'm like, oh, where's the deal? Who's got the deal, right? But these are the opportunities there, and they are the fund. El Fundo is still raising, and it's accredited, $50,000 minimum. So they're still raising. I love their layout. You can connect with Clint to learn more about it. Sentinel Net is also raising for their fund as well too. They're a long-term triple net. I loved about that. You feel like anywhere in their portfolio, you can say where you're from, then they're like, oh yeah, we've got a property there, right? Yeah. So it's awesome. Absolutely. And now the next guest to speak, also, he's actually a 2-time guest on the show. This is what everybody loves to talk about. This is multifamily, and this is the person who taught me to vet the jockey and not the horse. And that was really, really important. You have operators sitting up here at the table, and that's sometimes one of the best gift that you have is how to vet the person that you're working with, knowing who's running the deal, right? It's not the horse, it's the jockey that's running the horse, right? That's the one running the race. Ever since then, this has been to my go-to call for anything multifamily. We had a 353 unit pop up, and I'm like, hey, you got to help me out with this one, man. Where are we at? Very interesting. But this is the kind of relationships we're building. Everybody, please welcome Noel Parnell from Crown Capital.
Thank you. Look at, everybody up here is this. It's an honor to be up here. And then 100 got me thinking like, shit, I'm in the wrong area. 120, I'm building at 180. I'm like, shoot, man, that is amazing. That is amazing. I'm Noel. Thank you, Brett. Right now, I am a former scientist, former pro athlete. I am also the founder and general partner of Crown Capital, but I'm most notably known for creating lifetime cash flow through apartment investing. For the past 15 years, I've been helping friends and former colleagues invest passively in multifamily real estate. But what I'm most proud of is that 5% of our annual sales goes against battling human trafficking. And so to date, we've saved over 1,000 lives right now. So that's so important to me right now with that. And I just want to echo what Brett said right now. There's no such thing as truly passive. This is work. And I take great pride in being a general partner and really ushering my investors through life. I was talking to Noel earlier that they're just not a number. They're family. I want to know what's going on with their wives or their husband. What's going on with their children. It is so important that we do not look at people as numbers, but guess what, as family. Because as I said before, guess what? You always vet the jockey, not the horse. There's a lot of things going on in this industry right now where people are just doing deals for acquisition costs, and they're not stabilizing things. And a lot of deals are going haywire because people do not know how to underwrite properly or stabilize or operate properly. And so, the conversations I had earlier today, this is the right crowd, whatever avenue you have options. And that's all I ever want to do, give my investors options. We have a slogan called Wealth Without Wall Street. It doesn't mean I don't invest. I still invest in the stock market, but I want to give other options that I didn't know was not available to me when I was working as a scientist. All I thought I could do was put in the company match and let someone else run it. Not even know what Vanguard was. I didn't even open the Vanguard mail, tell you the truth. I didn't know what they were doing with it. But look what you have up here right now. You have self-storage, triple net lease. I have options right now where I'm going to say, guess what? How about investing in you guys right now as well? Like, this is so awesome. And Brett, thank you for having me here.
Well, thank you all for coming out for sure. And just to echo that, there's so much opportunity to be in this room. Gives me goosebumps. And starting with making it happen with, and I had messed this up before, Dentists and Doctors Passive Real Estate Investing Club. That's really important that I get that right, because what you guys are doing in that group, I'm an outsider, right outside of the medical professional world. And inside of this room, there are more than just medical professionals. There are real estate investors. And it's that ability to bring everybody together. I want to thank you for building that group. That is really important, and welcoming us into that group as well, too. I guess to leave it off, we can have some questions. If anybody has any questions about any of the asset class, I know I've got plenty of my own. We could have a whole nother podcast with each and every one here. Does anybody else have anything else to add? Where's the meal? Where's the drinks? Where's the masseuse? I flew all the way here. Let's go. So anybody have any questions about any of the asset classes or any of the opportunities or what's their next drink? No? Yes. Do I get to introduce you this time? Yes. The power woman of commercial real estate, all the way from Virginia Beach, Laura Nguyen.
Again, I mean, I'll speak about the company that I work for, but I'll also just speak from my personal investment experience. I am in commercial real estate, which is a field dominated by men, as most of you can see from this table right here. I am the only female, and I will say that I actually had our graphic designer change the image when Dennis could not appear. But I want to say that for the women in the room here, which, by the way, we outnumber all of you men, like, there is opportunity for you, and I hope that you all will embrace this, because I have made wealth in commercial real estate, and it wasn't starting off big. And Brett, I don't want to take away from the doctors, physicians side of the world, but I also want to just add that as a past president of CREW, Commercial Real Estate for Women, I will tell you that this is a successful path. It can be, if you can be smart about your investments and just really get down to earth and know who your operators are. To what Noel and everybody else said, like, if you can shake their hand and you feel confident about it and you feel you do your own kind of back of the napkin math, it's not 1 + 1 = 4 or 3. It's literally 1 + 1 = 2. And if income and expenses, and then you've got a cash flow, and you're like, hey, that kind of looks like it might make a little bit of sense, you might be in the realm of wanting to invest. And I know for us, we have some minimum investments for our current fund that we are in. Minimum investment is $100,000, but there are other real estate investments out there that you can dip your toe into, and I would highly encourage it. It does create wealth, and we're all here for the wealth creation, not only for ourselves, but for our children and those and legacies thereafter. And I don't mean to get the whole sentimental side of it, but I saw a lot of women in the crowd, and I just wanted to let you guys know, like, this is not just a man's game. It's our game too. So let's go.
Thank you. And I'm going to pass it back to Clint here for a second, but I had a question for you guys. We talked about minimum investment, right? A lot of times we'll hit, very rarely do we see it in the 25K range. Very rarely do we see the opportunity as a non-accredited investor to get into these deals. So if I'm sitting out here and I'm saying, how do I get started in the commercial side, whether it's triple net, whether it's storage, whether it's multi, how in the world can I get there if I'm not accredited and I don't have $50,000? Does anybody have an answer for that? Single family? Crowdfunding.
So crowdfunding is a thing. There are a lot. I mean, you can go through 506B, 506D, 506D raises. Our individually syndicated deals, we could have a certain amount of non-accredited investors. Unfortunately, for our fund deal, everybody has to be accredited. That being said, you can do crowdfunding where you don't have to be an accredited investor. Netcapital.com, and I only know them because I've just looked at their stuff briefly. You can invest $5 to $1,000 to $5,000, and you can look at several different deals. And not to take away from anybody up here or their credibility, but if you're just trying to dip your toe, do your research. There are certain platforms out there where you can be a non-accredited investor and do it. We are not a crowdfunder user. I'm sure most of you are not crowdfunder users. We are accredited only investor. However, if you're trying to just get your foot wet and you've got $5,000 to spend, crowdfunding could be an option for you.
Yeah. So in terms of that, right, there are other. When you say crowdfunding, you may be thinking, I got to go do crowdfunding. That's not what she means. Like, there is other firms out there. One of them is Cardone Capital, which, I'm not pitching for them, actually. I'm invested in them, but I'm not endorsing them. But I'm saying one of them is Cardone Capital. They do take non-accredited investments, which means you can put, I think the minimum is $200, something like that, and start like that. But you got to ask yourself, why should I do real estate over other forms of investment? You got to have a clear answer before you do that, is what I'm thinking. The reason is very simple. I started investing in the stock market back in '99 during the dot-com bust. I made a lot of money, and when the bust happened, I lost a lot of money too. And then I was thinking, man, if only I put some money in some real estate. Even if there was a bust, at least there'll be a building, at least there'll be some tenants, at least I can go touch and feel it rather than vaporizing in the bust, right? And if you look at the stock market in the last 6 months, it has taken off on a wild, crazy ride. I myself am still invested. I've got 7 figures in the stock market. It's taken off, but now it's coming down. So real estate is a safe asset where it may not grow like crazy, but one of the benefits is, it's a real thing. It's a tangible. There is tenants, there is buildings, there is leases, all these things you can see, and you can get a lot of tax write-offs with real estate. So those are the things. And then you ask yourself, but it's like many people said here, it's not totally passive. Nothing is passive. You got to be involved in this. And you got to learn the game of real estate investing and bet on the guy who is doing that investing. Like some of the smart guys over here, they all sound like great. I mean, I can tell these guys know what they're doing. But at the same time, there are some guys out there that you got to be careful about too. So you got to bet on the right team, the right jockey, and then invest in real estate. And I think that's my word of advice.
Coming at you, Clint.
So for the unaccredited investor, there's a spectrum, right? And typically your options look like this. And again, it doesn't have to be syndication. You can invest in a family's business or something like that. On the lowest tier, you have crowdfunding, right? And you can put in low amounts into a lot of different things. In that space, it's fairly dangerous. And there's a lot of pitfalls in terms of operators and a lot of people making big promises because they know they're dealing with mostly unsophisticated investors. The next step up from that is 506B offerings, which means that they can accept non-accredited investors. And just so we're clear, accredited means as an individual, you've made $200,000 a year for the last 2 years and expect that to continue, or $300,000 as a couple filing jointly for the last 2 years, or you have a net worth of $1 million, not including your primary residence. So that's what that cutoff is. It's a rule that the SEC, they say, people below this line, we think that they probably may not be as experienced, and there's a potential that they could be taken advantage of. So we're going to limit what they can invest in. Above that line, you can invest in a lot more offerings. So here's what we know. 92% of the capital out there that's being invested or is ready to be invested in real estate is held by non-accredited investors. So you got your crowdsourcing, and then you have Reg A, which is Grant Cardone, and the step up from that. And he has to register independently with each individual state, which he did, and Cardone Capital is exploding. He's got thousands of investors, and the average investment size is probably a couple $1,000s. The next step up from there is 506B syndications, friends and family. This is people that the operator has an existing substantive relationship, is the word used by the SEC. It's designed so that groups of people, 20, 30 people, family members, friends, can pool together to do deals greater than what they could accomplish on their own. With Nomad, and this is not a commercial, but this is our journey. We buy an old Kmart building for like $1 or $2 million. We put $2 to $3 million into it, and it typically appraises for $13 to $17 million. So our raise is really light. We only need a couple $1 million for an individual deal. So we started as a 506B syndication with the physicians that I worked with and was friends with, and with our local group. Anybody could put in, and we would raise a couple $1 million, and we would do a deal. When you're a 506B operator, you are not allowed to do any, it's called general solicitation. You're not allowed to do any advertising, and you are limited to 35 investors in any individual deal. But when you're only raising a couple $1 million, that doesn't matter. Our average would be, we would have 12 to 17 people in a deal. No problem. So we started as a 506B, and we knocked out 8 to 10 deals that way. When we converted to a fund model, which we currently have, I've got a $10 million fund right now, about $6.5 million already raised and deployed. I got 1.5 committed. I got a couple million to go over the next month or so. Within that fund, we didn't want to leave behind that community of investors that we had built. Those are our nomads, right? We're trying to build a tribe of real estate nomads. So our option was we opened our fund as a 506B fund. We got 35 non-accredited investors into that fund. That's our cap. Then we converted it. Legal team filed the documents. We converted that to a 506C fund. So from that day on, we can no longer accept accredited investors, but we are now allowed to do general solicitation. So from that point on, which was about $3 million in the fund, everybody has to be accredited. But now I can launch a nationwide marketing campaign. I can come here and I can talk about it to you and share it because we're a 506C registered fund. So that conversion model is something that it's more expensive for us and it's harder for us, but those are our people. So I think your best option if you're a non-accredited investor is look to partner with people where it is a partnership and there's opportunity for you to invest with that person. And as they grow, there's space for you to grow because you can be part of a 506C offering if you joined when it was a 506B, but a 506C can never go back to being a 506B. It's linear. So if you are that non-accredited investor, that is the spectrum and that's your trajectory to move upward.
And that's awesome. That makes me think too of the three C's again, the capital, control, and commitment. And I thought of the analogy is if anybody has ever paid a contractor in this room, I want it good, I want it fast, and I want it cheap, right? Capital, control, and commitment. Those things, somebody can draw a circle of this, put the AI image up there, draw a circle of this. You're not going to have everything. And the benefits that you speak of when you take one over the other change as those circles link over each other. So that's a great advice on how to start, where to start. Sometimes it gets a little difficult because all these different letters and accreditation, and you say $2 million like it's just $2 million, but I've never seen $2 million before, right? So it starts here. And it comes down to the mindset, and where we've all started when we're expanding our associations is we've got to change our mind. You change your mind, you change your life. It may be $2 million, but it's attainable. It's possible. It's all about where you start, what you're thinking, and who you start with. It's really, really important. I think that's great. Does anybody have any questions out there? The power panel is just waiting. Laura, come on. She's so fun, isn't she?
Sorry, I'm a little feisty. So we have a plethora of well-tenured physicians, dentists, call it healthcare professionals in our world. But I also can see where the younger physicians and things like that, and all they can think about is their debt that's due. And so how do you all use your platform as an education for them on monitoring, like, okay, I've got, Lord knows, $300,000 of student debt, but like I can invest and sort of make a return on my money, because that's where I feel like as investor relations, like, how can I say to somebody, yes, you have this looming over you, but here's your potential. And so how do you guys swim around that with your younger folks coming in as you mentor them? I mean, new physicians, and I'm saying not 1 year, but the 5-year, the 10-year folks that are still looking at their Yale debt.
Here's the thing. That's a lot of question. That's a lot of question, by the way. Yeah. So my biggest thing is, when we start off with our mentoring, I always like to say that your business, our profession is our main thing, right? And always our main thing should be our main thing. And it's, again, a mindset kind of thing, like Brett said. Like, you got to make sure, like, these guys are understanding, like, somebody who's actually 5 years out, they are actually maybe, they are associating with somebody, or they are like, just open up their own brand new practice. Student debt, then they got family, they got mortgage. Now they got practice debt. So you're right. I mean, that's kind of hard. What we like to do in our group is we like to start educating them that, hey, you know what? Let's do this here. Whatever you're making, let's take about, let's say, 5% or 10%, whatever they're comfortable with. And let's start storing it. I don't call it saving it. I call it storing it, because now they got to take that capital and deploy it into an investment. Now, the downside is most of our colleagues are going to be investing in like a mutual fund or maybe, like stock market. And that's the typical, investment vehicles that we got offered by these agents. So education, I think, is number one key. And getting the mindset to work in a different manner, I think that's going to be the second most important. That's tough. So how can sponsor educate them? Is that right? I know. Well, before I answer that, I would like to hear your answer, because you deal with a lot of dentists and physicians, right? What is your experience been since you've been dealing with quite a few of them?
And I love the punt back. That's great. I feel like a safety over here. Like, I got to figure it out. So I guess as investor relations and marketing, I get a lot of calls, and I get a lot of calls from folks that are dentists that either are mature, and I would say it's a maturity thing too, right? So I'm talking, 5 to 10 years into their practice. However, some are still dealing with debt, and then others are saying, okay, that's great, but like my risk, and it's the risk profile that I have the hardest time with explaining. And luckily for us and the fund that I'm with, we've been able to deliver. However, I would say the risk profile for the mindset of maybe physicians and this whole healthcare spectrum is it's calculated risk, right? And so I have a hard time getting around that and saying like, you're going to earn 8 to 11% year one cash on cash, or maybe just even explaining the metrics of it and understanding how the model works, because they're so calculated in their everyday jobs and their everyday, like, I know if I give 15 milligrams of whatever, this person's going to react however they react, right? So I think it's just an understanding of, the investment in the process, and then what the outcome potentially could be, and then calculated risk. I think that is the biggest thing for me, is just like how to get around that or to explain it better. Maybe maybe you have some insight on that.
So I love this question, and I'm not a physician. I don't work directly with a lot of physicians, but I do get to ask that question or feel that question because I do work with physicians. I market directly to physicians in a world where you got to overcome that trust wall. Once you get over that trust wall, then I've got a little different conversation if I'm up to that table. But the reason why it's difficult to get across that trust wall is the risk adverse aspect of a physician. Just like you were saying, if that medicine is applied, if that practice does something wrong, you don't want to go wrong with that, right? It's not real estate. The other challenge that I see is they're lifelong learners, right? Physicians, dentists, lifelong learners. But what they're learning is from financial advisors. Financial advisors are the quick to approach. They know the process on where the information is being provided. Real estate is an inefficient market. The stock market is an efficient market, right? So those are the differences that we can measure to where, this makes sense. Again, back to the risk adverse piece and when that information is provided. So I think with those things tied in, there's a challenge of how do we get to real estate? How do we get to the person who is the one thing is the one thing? I think were you, Noel, were you saying that? Clint, were you saying that? Their one thing is medicine, right? So how do I get the time that I need to educate them on this inefficient market, these products, and even before that, get through that trust wall? I think that's a great question.
All right, so all I'm going to say is dentists and doctors, honestly, we are probably like the worst investors, okay? And Tom knows that very well. I mean, if you guys have dealt with them, you understand, like, everything is so skeptical. Like, you try to present a deal, it's like they're going to find like 10 negatives before they find a positive, right? Isn't that true? Correct. So my whole issue with, in our profession, it's because we spend so much time and effort in doing the whole sciences and the whole medical school and dental school that we've kind of isolated ourselves. And the problem is networking. It's like just within in our little own dental world or our own little medical world, but we never learn how to network outside our profession. And when we kind of get exposed to it, it's like a whole different world. For me, it was a game changer for me when I met Tom. Believe it or not, I was at this summit. There was 2,500 people. I was the only dentist in that whole crowd, right? Because nobody steps outside their boundaries. So how do you change that mindset? Now, changing that mindset is one thing, but how do you make them to invest in deals? So that is another issue that we deal with. And we have the same battle going on even in our group, because we are like always educating. And the problem with a lot of these dentists are we are scientists, right? We are like how do you call it? Technicians. We just want to analyze without taking action. And that is one of those downfalls. And to answer your question, it's very, very difficult. Yes.
So a few things that I did to overcome that is that, because I agree, very skeptical. I remember showing some returns. They were like, no way you can get those returns. Right. No way. And I'm pretty conservative. I think I was telling you this, is that I don't reach out to, I haven't had dentists, but physicians when I have a deal to be done. I'm already cultivating that relationship and it's already pre-existing. So I'm already, for instance, I'm about to get a box for the Phillies. That box that will hold 22 people. I'm going to invite 22 physicians, some of them that I know, and I'm going to say, bring a friend. I don't have a deal for them. It is not there for a deal. It's there to build camaraderie and a relationship. Because most importantly, they're skeptical. So they want to know about you. I'm also there to share with them my background. I open my books up to people. I have nothing to hide. If you're that good, I can share my tax returns. I don't care. You want to see my deals that I've had come full cycle? I can share that. You want to see what went wrong? I'm going to share that with you, because everything does not go well. And that has helped me when it did come time for a deal. Me and Kyler closed it.
That's awesome. And all the way from Philadelphia, and Noel's backstory too is really impressive, even in the real estate world, of starting with the challenging deals. And I know if I've got a challenging deal, I can throw it to Noel and he's going to give me the straight. He's going to work to find what's wrong with it, but he's also going to work to find where the opportunity is too. Clint, you're sitting quiet on this question. You were in medical sales, right? So you know the trust wall. right? And I'm not saying this for the reason that I'm trying to get something from physicians. I'm saying this because we're trying to get across that wall to create the relationships, to give something to them, to give something for them. That's why we're having this conversation. Sales. The crazy sales guy, right? How do you get across that wall of that trust wall? Because that lends well now, and it's just a different product that we're selling, right? What were some of your experience for Laura's question?
So I come from a unique background in that, I spent 16 years implanting pacemakers and defibrillators, working with these physicians, and that's a position of trust that you have to earn. People don't go into surgery with you or crack chest or do laser sheath extraction or revisions if they don't trust that you're going to be able to handle the situation. And that just comes from, having good mentors for me and training in the sales process. And I always approach it from a place of education, which is exactly what you mentioned. That's the right way to do it. My job is not to sell my deals to anyone. My job is to educate. My job is not to sell you on my pacemaker or my defibrillator. My job is to educate you on the technology. You make the decision that's best for the patient. My job is to educate you on our deals. You make the decision as if it aligns with your goals. And if it does, that's great. And if it doesn't, that's fine. One of the benefits that I had is that I spent 16 years doing that. So when we started syndication, most of our initial investors are physicians, cardiologists, electrophysiologists, surgeons that I worked for, pulmonologists, neurology. There's overlap with AFib and, different things like that. One of the beautiful things about the medical community is that, I've got college buddies. They've got college buddies, and then med school buddies, and then fellowship buddies, and then residency buddies. And it's this huge community that overlaps. And when they've had experience with me as a rep, being a very small part of a big machine, but a machine that's saving lives, there is trust there. And so that translates. Everybody wants to see how your first few deals go, but then they know that you believe in them. They don't know if you're right, but they know that you believe in them. And once they see them come to fruition, that opens up a lot of doors with their community. And that trust does transfer like that. I think the biggest thing is always to approach everything from a standpoint of education. So I talk a lot about storage and the crazy things we've seen happening in the consumers in the self-storage space. And it'll be things like, when you think of self-storage, you think of baby boomers and a metal row of storage units, and they're in there once or twice a year. That has completely changed since COVID. The millennial population is now the largest population segment in the country. It's 34% of the population. They're using 38% of storage. But that population is using storage completely differently because they're not buying houses the way the previous generation did. Your house comes with a garage, an attic, or a basement. This younger generation is renting. When you are renting based upon the amount of square footage that you get. So instead of renting a 2-bedroom condo for $1,800 a month, you're renting a 1-bedroom for $1,300. You still have stuff, but it's lifestyle items, and you will use a climate-controlled self-storage facility for $150 a month as an extension of the closet, extension of the garage. So they're in and out of these properties once or twice a month, if not once or twice a week. And their items are like mountain bikes and snowboards and fishing rods, and they need to be able to get in at 6 a.m. on a Saturday morning, get their snowboard and their bibs, access through a QR code on the door, a touchscreen kiosk, and get out of town. So the model that's working now is to move into a small secondary and tertiary market across the Southeast, pick up an old vacant big box retail building that's been empty for 10 years, have it open in 12 months versus the 3 to 4 years of new development, do it for half the cost of construction, and then you've cannibalized, like you've got a really strong residential density in that area where people are being pushed out of the larger urban markets into that small suburban market, and you're stamping 100 square feet of storage there in a year. It's really hard for somebody to compete with that. So I don't care if it's with me or not, but if anyone is thinking about investing in self-storage right now, it needs to be these things: safe, secure, well lit, easy access, centrally located, and it has to be climate controlled. My job is not to sell you on my deals. My job is to make sure that in my access, like my little realm, that you are educated really well so that you know what the right decision is to make for you. I can't control if my timeline and returns line up with your goals for your life. And if you don't have goals for your life well defined yet, I would encourage you to put those together, because I never want to come from a place of selling you. It's always from a place of education. That's with pacemakers. That's with operating commercial real estate. The deals are the deals. The operator is the operator. My job is to be ethical, transparent, and show you what we have. It's your decision as to if that fits or not. And I find that when you do that the right way, people are willing to take a chance. Analysis paralysis is a very real thing in this community, but risk is a muscle. And the more that you work that muscle, the stronger it gets. And you just have to put people in a situation where they understand the deal and they understand the operator from a place of education, not sales. And that will take care of itself in the right time. When they can define what their goal is and put a timeline to it, you can work backwards from that goal to put action steps together as to what you need to do to achieve, hopefully, the time, financial, and location independence for your life so that it creates an independence of purpose. And that always comes from a place of education, in my opinion.
Wow. That was wonderful. Know your numbers. And it's very interesting, too. And you talked about the millennial number. And if you think about how interest rates are creeping up and how that affects mortgage payment versus rent payment and how that will drive renters versus homeowners, knowing your numbers is really important. And surrounding yourself with the right people is really important. That's where the education comes and not sales. And it's difficult. We all have this mindset or a cynical piece of our mind that you just saying that, Clint, it sounds like sales to me. I've got to settle, build a relationship so I can start hearing your numbers. That's a struggle all the way through. And it's so fascinating because so much of us stop learning. There's a stat about reading a book after you graduate high school. It's remarkable how many people don't read a book after you graduate high school. We've got to continue that childlike curiosity because that's when the relationships are built. That's when you can vet a jockey. That's when you can build a deal. You can build a partnership. You can escape medicine to partner with people outside of medicine. Caught, not taught. It's beautiful. Thank you guys so much. I think this turned into almost like a podcast up here. It was the power panel. You guys are amazing. Thank you so much. I know you flew so many miles, drove so many miles to be here. I really appreciate it. If anybody has anything else, I can wrap us up and then we can break loose. I just wanted to add one last thing. I heard somebody else tell me about this analogy, and I always mention it on the show too. The seed is planted. Just like when I said, I think my brain has confused my name with real estate, the seed is planted in my mind. And the tough part about that seed is that seed has to get dirty in order for the fruit to come. It's not easy. There's no such thing as passive income. It's going to take work. Hopefully you surround yourself with the right people to know your numbers, know your why, know your end goal, and come back from that direction. Because what you build now can eat you tomorrow or it can feed you tomorrow. So you make the decision, and it's all about surrounding yourself with the right people. And I am confident that you guys are here to see that this is who I want to surround myself with. So everybody, thank you so much. I really appreciate it. To the guests out there today, make sure you scan that QR code, and I will connect everybody with this panel. I'm telling you, it's the inside link with the move makers. And I'm so happy because it is education. It's not sales. And the power woman herself, Laura, all the way from Virginia Beach, is showing down, putting Noel on the spot. I loved it. But thank you again. Thank you, everybody.